Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So what I want to do today is looking at the market, the general markets. You can see everything is expensive, okay? Basically the S&P 500 is up 20%, the Dow Jones is actually up 7%, and the QQ is up like 45%, or the Nasdaq, okay? What I want to do is I want to show you a high growth company that is still undervalued, okay, according to the information that I've gathered. So I'm going to share that with you now. But before I do that, like the video, subscribe to the channel, let me know if you have any questions. And as always, if you have not joined us on the Discord or the Patreon account, please do so, because that helps the channel, okay? The company I'm talking about today is Booking.com. This is my favorite company to go to whenever I'm basically planning a holiday. And this is they don't pay any dividends yet. As you can see right now, the stock is basically for 1 year is up about 57%. A year to date, the stock's up 48%, but it still feels undervalued. So I'm going to show you that from basically the overview of this company. If you're really interested, they don't just own Booking.com, they actually do own other basically website like Hotel.com and other basically companies. So you're going to have to do a little bit more research to find out about each one of the companies that they own within that Booking.com holdings, okay? But I'm just going to give you a quick overview information about this company first, and then I will take it from there. As you can see, it's in consumer discretionary, which means basically it is not one of the things that we find essential, that we have to buy all the time and whatever, okay? When would you go on holiday? When you have extra money, right? You're not going to go on holiday all the time. Basically, that's what it means to consume discretionary. In terms of EPS, current price is actually $3,000. I remember when it was about $2-something, you know, $2,000. I think it was 2,400, 2,300 when I started talking about this company. And look at it right now. It's $3,000 right now per share. EPS is $101 per share, basically right now. A market cap of $108 billion at the time of recording. It has a narrow economic moat, because I think that's fair, because this is a market, although everyone knows them, but it is a easy, basically anyone can enter that market if you like, okay? And beta is actually above 1, which means it's a little bit volatile. In terms of PE right now, we're looking at about 29, okay? Forward PE of 21, so that's very interesting. And the 5-year average is actually about 21 as well. So it looks cheaper looking at this, and the sector is about 27 at the time of recording, and the S&P 500 we're looking at about 23. So it seems a little bit cheaper going forward than where it is right now. It's basically when you look into the future, basically, okay? Price to free cash flow, we're looking at about 15, and PEG ratio just above. Remember, PEG ratio we're looking for basically below 1.5. So 1.13 is actually not bad at all, okay? Free cash flow right now, we're looking at about $7.4 billion. Free cash flow margin of 7%, and free cash flow yield of 18%, which is really, really good when you think about. So from cash point of view, so cash flow point of view, this is actually really good business. Profit margin 22%, operating margins of almost 30%. Return on equity is 140%, and total return in the last 10 years we're looking at about 13%, which is really good. Return on invested capital percentage wise is actually 28%, okay? And the revenue growth, compounded annual growth rate, is about 15%, and the current ratio is above 1. So looking at this is really good business. This is the type of business I like to own. This is the type of stock that I would love to have in my portfolio, okay? And the next thing we're going to now look at is the valuations from Analyst. This is not my valuations, okay? This comes from different websites. I'll share with you some of this information in a second. But this is basically information that I've gathered from other websites. I'm not doing a cash flow model, okay, discounted cash flow models or anything like that. This is basically information I've gathered from other websites, okay? This comes from Yahoo Finance. So as you can see, they expected the earnings to grow by 18%. And the growth estimate for the next 5 years for this company is 25%, which is really, really good, 25%, okay? Fair value according to Simply Wall Street, okay, it's $3,362. 13% undervalued if you take into consideration, okay, basically where it is right now. And fair value for Morningstar is $3,130, and that's about 7% discounted right now. According to TipRank, it's not actually minus, that's a mistake there. Oh, actually, no, it is actually. Okay, according to TipRank and Seeking Alpha, both of them actually said it is overvalued by just about 1% or so. Okay, but they have given a buy ratings. That Seeking Alpha has given a buy rating. So if we go back here, go to ratings, you will see Quant, which is basically the system this company Seeking Alpha uses, is actually strong buy, and you don't normally see that. You don't normally see this. And when you look at the fact grades, okay, and the factor grades, you look in the valuation, they're saying it's maybe a little bit expensive. Okay, so they've given it like a D, a plus, but growth estimate, profitability, momentum, and revisions, all of them are really good. Now, looking the analyst and what they're saying is actually a buy for them. But when you look at this, it's also actually has changed. Oh, that's interesting. Okay, well, no, it was a buy. Sorry, this was still the same. So 2% upside, okay, downside. Okay, so at the time of recording, this is basically, this is live data. So this is basically, we'll use this one instead of the 1% that we've got in here or whatever that was. Okay, but as you can see, yeah, the other three actually websites are saying, the other analysts basically are saying it's absolutely a buy. They're still saying a buy, but right now, if you buy it right now, they say basically it will make sense, to be honest with you. Why would you buy a company knowing that you're going to be down for 2%? These people are useless. But when it comes to Quant, which is actually, I've never seen it, that there's not that many companies that are rated strong by this system that they use, which is quite good, I believe. Okay, so that is basically overall in terms of where the valuation of the company. In terms of Sharia compliance side of it, there's actually no issues. Okay, 90, let's call it 99%, and 12% in terms of interest-bearing debt, and then interest-bearing securities about 15%. They have been buying back their own shares, which is quite good. So they don't pay any dividends, but they have been buying back their own shares, which is quite nice. And if we look at the revenue growth side of things, okay, so if we look at the forecast for this company, you can see in 2018 they had what, $14.5 billion. Then obviously 2020, because the whole world shut down and no one was going on holidays, okay, 6.8. and look at it where we are now, almost to $23 billion. That's what they are basically, in the next 2 years, that's what they're expecting. Okay, so let's have a look at right now where we are in the earnings side of things. So let's go to the estimates for the next couple of years. So you can see they're expecting double-digit growth each year for the next 3 years. So we'll just look at the first three as usual, because those are where the majority of analysts are. So 39%, 18%, 17%, which is really good for EPS. Okay, the next one is the estimate for revenue. Okay, 21, 11, and 10. That's really good. Again, double digits from 20 billion to 25 billion. They're expecting in 2032, let's even just go to 2030, okay, that to go about through basically $35 billion. That's huge. Okay, so yeah, it's growing really good. I mean, again, there's only 1 or 2 analysts on this side, but the top 3, if you just use that, that's almost double digits every single year for the next 3 years. Okay, so that's really good. I mean, this is the type of business that you want to own, and it does look like, based on the financials that we looked at now, it does look like it's actually undervalued at the moment. Okay, from the current PE, yes, but forward PE is actually quite low for 20. In fact, you can see it here if you look at the forward PE. I think here, there we go. Okay, you can see forward PE and where it is right now. So yeah, it's a decent company. It's been around for a very long time. They have a solid business. People go to their website, buy it, and what they do is they grow their business organically, and also they take the competition out. So any website that comes up that's doing absolutely amazing, what do? They buy them. Okay, and here are the breakdown of the companies that they own. I thought they own hotel.com, but apparently they don't. So if you ever used any of these websites, you definitely using their basically a product basically this company owns. Okay, so there you have it. That's the stock that I wanted to talk about today. Again, I'm not saying go away and buy it. Do your own research, find out a bit more information about the company. Go to their website. Look, there's a lot of information here, okay, that you can actually find out basically, if you just go to their website, there's so much information, how the company is growing, how many companies that they own, their directors. You can learn more about who owns the company, the shares and all outstanding, and everything else basically that we need to know in order to invest in these companies. Okay, so I hope you enjoyed the video. Have a wonderful day. Don't forget to like the video, subscribe to the channel. Let me know if you have any questions. I'm going to continue doing this, but all I need from you is just to make sure that you actually just press the like button to help me keep going, inshallah. And definitely join us on the Discord, where you get access to all of these spreadsheets, inshallah, that I've been sharing with you guys. Have a wonderful day. Assalamu Alaikum.